Good morning, everybody. Welcome to Phoenix Trading Strategies webinar room, where strategic knowledge and information allows you to trade successfully. Before we go any further, let's go to the disclaimer. Today is July 31st, 2015. It is 9 a.m. Eastern Time. Disclaimer: future stocks and spot currency trading have large potential rewards but also large potential risk. You must be aware of the risk and be willing to accept them in order to invest in the future stocks and forex markets. Don't trade with money you can't afford to lose. This website is neither a solicitation nor an offer to buy and sell future stocks or forex. The representation is being made that any account will or is likely to achieve profits or losses similar to those discussed on this website. Past performance of indicators or methodology are not necessarily indicative of future results. Being that said and done, good morning to all of you, and welcome. For those of you that are new, welcome. For those of you that are back, welcome back. Quite an interesting evening. You know, I didn't trade last night, but I see that the markets did. So let's get to that real quick. Let's go to the calendar first before anything. I always want to see what the news was. So you had quite a bit of information. You had yesterday evening at 9 p.m. New Zealand business confidence, Australian PPI, private sector credit, and then at 1 a.m. we had housing starts for the yen for Japan. We have German retail sales, French consumer spending, Italian monthly unemployment rate, and those numbers did not come out that well, yet the euro rallied. CPI flash estimate came in year on year on track. Core CPI came in better than expected for the euro, and unemployment rate came in slightly negative, not much. Italian preliminary CPI came in less than expected, and then this morning, about half hour ago, you had a Canadian GDP, which came in negative, and U.S. unemployment index, which came in negative as well. Really negative, not good. Next, within the next 40 minutes, we'll have Chicago PMI, and then at 10 a.m. we'll have revised consumer sentiment, and that's always a very interesting one. And that's pretty much it. And then China will come in later in the evening after the market's closed to announce PMI and non-manufacturing PMI. That's very convenient for them after the market's closed. So let's go to the charts and see what in the world is going on. Now this is gold. This just happened right now. And this kicked in literally at 5:45. No signal on this one. At least not on the 15-minute. Let's see if we have something on the 10. No. Anything on the 5? No. No, I don't think I would have gotten in on this one. Everything was short, and they came back above the open. But let's see. There's always, anytime you have a move like this, it is somewhat sporadic. But there's always some sort of signal on it. And that's what I'm trying to see, if we had anything on the higher time frames. But no, I mean, this trade came in yesterday on the 1 hour, which was basically down. This one here doesn't seem to make sense why it came in that way. This indicator basically said up, and probably that's why, but there wasn't really a signal on the higher time frame to go down, which is what is concerning to me. Rarely do they do this type of nonsense unless they have defined the floor, which is at 1080 for gold. Let's go up one more. Let's see. No, I hate when that happens. 1 second. Let me add more data. nothing on the short side. So no, not one of the trades that we would have definitely gone into. I think would have been somewhat surprising. Let's take a look. Let's take a look at the Dow real quickly. Another one came down, but no signal. This one didn't have a clear signal at all. I would not have traded this one either. Very, very sporadic. Let's see on the smaller time frame, if anything. Nope. Let's see on the 5. No, but we did get signals to go long, and this one came in literally at midnight Eastern time, or no, actually it was around 11 p.m. Eastern time, and then the trade was actually defined here, literally an hour and a half, an hour and 15 minutes later, and it went long. And then you had a re-entry here, which was closer to 2:45 a.m. Eastern time. And then this one came in short, but nothing here. Again, one of those that just wouldn't have made sense. Maybe S&P had a signal. No signal here. But the moves were really nice, though, I have to admit. They are definitely moving. No signal on the 15 or higher time frames. Everything was on the lower time frame. Let's see the DAX. Our buddies at the DAX. Well, this one didn't really do much at all. Now look at that. You did have a signal to go short, and it's been trading off of the trend stop. Question is, will it go long from here? Not when their markets are about to close. So this is some, again, we're looking for clear signals. Yesterday, there were really clear signals on trading this thing down. Yesterday at the new open, it was a clear signal to go down, but it never did anything. And it looks like it wants to make a move to the upside. Let's see on the smaller time frame. No, I still wouldn't trade it to the upside right now, based on what it's done. I would actually wait on this. It just might come down, but it's not defined. Again, it's the end of the day, so this one wouldn't really matter. Excuse me. Excuse me. No clear signal on this one. Well, you did have a signal here towards the yesterday morning, but nothing here that it would continue. Now, these levels that you see here, these are daily levels that power dots have formed, that these dots have formed. This is a mid-range level, so when they broke through this, they really run. But there was not a clear signal on this one to get in long at the new day. This one was here, but it was very questionable. Actually, this came in and sort of came right back. This, I guess on the 10-minute, it did towards the end of the day say long, but I don't know, it's a little bit too messy. Normally this one is a very structured trade. The 30-year Treasury bond has been one of my favorites in the futures, and we'll get to Forex real quickly. And let's take a look at silver real quickly, and then we'll end it with crude. Ooh, wow, silver made a move. But again, there was no clear signal on that one to go long. Everything was short, and then suddenly they decided to change directions. We wouldn't have had a signal here, but we would have definitely caught this complete move at the open of the new day all the way down. That's not bad. That went from 14,705, 1470 to 1452. That's a pretty good move. But that would have been the only one. The next one to the upside would not have made any sense. And this is platinum, of course, on the 5-minute, and then you had an entry here to go short, and it never looked back. Nice trade on this one. But then again, here it just sort of rebounded up right now. No signal to buy on that one. And let's take a look at crude last but not least. Actually, crude did have a signal to go long here. And this was at 5 a.m. Pacific, which is 8 a.m. Eastern time. They used a trend stop. It stopped here, even though you didn't have any more power dots forming. Sometimes you just need one to tell you that it's going to go long. And it went from, let's see, 47.59 to 48.16. 17, that's not bad. That's a pretty good trade. That would have been the only trade of the morning. And the trigger was actually at 8:30 a.m. That's when it went long, right here. This was your entry. If we look at the volume here, and it's always interesting to see how the volume plays out when you do get a signal. This is probably the most important part of analyzing the trade. Even though it's already passed, you still want to go over it. Yeah, we all want to trade anything that screams. You know, the reason I'm going over futures with you is because there's a very strong correlation in the commodities towards foreign exchange. And some of you do trade futures, so it's always interesting to get, you know, a second opinion. Now let's take a look at the volume real quickly here, because this is basically where it becomes real interesting for many. So it's your buy, your sell volume, and your net. Now when it hit, basically they came in at 210 million against 268. So it was highly negative. That's a lot of high frequency at that price level, at 47.51. The difference of 58 million that did not break the threshold to the downside. Then this one came in 718 against 197 million, difference of 521, and it moved. But then this one came right back down to it, and this is where the negotiation takes place. Usually they'll take between 5 and 6 candles to offset their short positions before going long. This one was 304 on the long, 609 on the short, difference of 305, and it did come right back down. Then this one, you can see that the high frequency is just at its max, 605 on the long, 670 on the short, difference of 15 million, and it didn't really do much. However, that's okay, because that tells us that they're starting to offset their orders. 579 on the long, 373 on the buy, difference of 206, and it did go long. And then this one, of course, came in negative 318, 398. And you can see as the volume starts to decrease, that means that they're getting ready to go long because they've already offset their short positions. So this is information that normally you wouldn't be able to see inside the candles. All you would see here would be a lot of nonsense, but you wouldn't understand why. We give you the numerical value to understand exactly what is happening and why it's happening. And this is last but not least, look at the volume, how it just dropped. It went 206 on the buy, 128 on the sell, 78 long, and then boom, here's where the volume came in. You know, this is where they really moved it. 1,565 or 1 billion, 1.5 billion against 1.1, difference of 447 million, and they moved and they never looked back. So here, for instance, you know, you can see how as they decrease in volume, they're getting ready to set up to go long. And this was 1, 2, 3, 4, 5. This could have been the entry. 6, it would have gone against you a few cents, no more than 6 cents, and then they came in and boom, popped it. Normally the entries on the 4th or 5th. I like the 5th candle myself personally, and if there's a small retracement, it's not significant. The pivot here sort of set it up to go that way as well. And here's another trick. Whenever you see a level form and it forms right where a pivot is formed, that's a very strong support level. Very, very strong support level. And it doesn't just happen in the futures, but it happens very systematically in Forex. So very important to also take into consideration. But look at this thing. I mean, it's you know, it's on the move. It hasn't stopped. I wouldn't, you know, I don't like to chase trades. That's not my thing. But I say you can pick up a few cents if you wanted to. So let's go to FX and see what is driving everyone mad right now, because the euro had no reason to go long, and yet it did. Let's give it a second. It's the volume indicator, my fault. I should have removed it. Ah, yes, our buddy. But I like to look at this one on the 15. Unlike futures that you have to go down on the smaller time frame, the 5, the 3. Sometimes, well, crude especially. FX is a little different. You'll be looking at it in higher time frames because it'll make more sense. And we're going to see what web we've... Okay, the signal came in here. It wasn't short because they came in to challenge it. And I've taught you guys that whenever they come in very steep with the candles like this, and don't give it enough room the way this. See, this is a perfect example of a short yesterday, but this is a perfect example of I'm going to break this level. Now this came in, and this is a mid-range level. It's not really a support or resistance level, but it came out in the daily. So the power dots formed here. And that's why they went from level to level to level and then to level to another level. So they went from this level all the way to a 720. This is a 720-minute level that they hit. Now, it wasn't really clean on this one. I would have probably looked at the higher time frames to actually see the volume indicator. Give it a second. You see, the banks, market makers don't make their decision process off the smaller minutes. They make them off of the higher minutes. We just look for entries off of those. Now, this is a 20-minute, and this would have been a clean signal to the upside. And this came in at 3:40 a.m. Eastern, which is 12:40 my time. And it never looked back. And we're looking for the 5th candle. So this is 1, 2, 3, 4, 5 right here. Let's look at the volume. I think you really want to see this. So here, for instance, when the first power dot formed on the 20-minute, you had 348 million against 303, a difference of 45. Now that's a bearish candle with bullish volume. The next candle comes in, and it comes in bullish, 353 against 322, difference of 32, and it holds right above this level. If you notice, this one, even though it came down, it settled right above 109.30. Same with this one. This one came in 265 against 186, difference of 80, moved up. Though you can see the volume just dropping because they've offset their positions. Then you got 176 here against 196 on the short, difference of 20, but they never challenged this price any further. And then finally the fifth one, 137 against 179, difference of 41. And I think your entry would have been here actually on this candle. 309 against 350, it went long and practically broke above 109.50, and that was really the shaker. One, because again, as soon as it broke above it, this is a mid-range level. They're gonna move right to the next level. This thing, slowly creeped in, and then it just popped this morning. They were waiting for this morning. Could you have caught this trade? Yes. You could have definitely gotten in on this trade at around, this is 2:20 a.m. my time, Pacific, so it's about 5 a.m., 5:20 a.m. Eastern time. Let's remove the volume indicator real quickly because it is in the way. It takes up too much data. Let's see if we would have gotten anything on the 30. No. How about the 45? No, not there. However, yes, this one did. It came in and bounced right off of the trend stop. The trend stop can also be used as a support level. If they don't break it, then they'll come back and break the the previous level, initiating. Now it did go short, but it never broke below the trend stop, and the trend stop was always to the upside as well as these. So remember, these forming here right at a mid-range level where there is no real support or resistance. It's one of those levels that they use at, conveniently as a support or resistance level, but not really meant to be that. So that's why that one played out, and it never looked back. But again, I would have looked for a signal here on the higher time frames, and we did have one here previously. So if you would have gone to look back historically, there was a level here, but I would have preferred it forming here. That's just my personal taste, and that's why I like to look higher sometimes on the higher time frames, because I want to see if there was anything. See, this was on the 120 minute right here previously, and they used it again. Now again, they did have a pivot here, so I guess you could say if there was a pivot here lining up with this one, it would have said, but I don't like to interpret it that way. It sort of complicates things. I would have preferred looking for another level of confirmation. Now, in the 240, there was right here one dot. One dot can mean can signify everything. Like I said, they've been doing this for some time now, and if you're not paying attention on the higher time frames, you'll miss out on these trades because they're very significant. Let's see if we have anything on the 300. No. So that was it. So when you go back to the smaller time frames, yeah, you can see that basically this was the level that they were playing, and they were not going to break below it. And then they just, this morning they went long. I don't think I would have taken this trade personally. I would have liked to have had a confirmation on the smaller time frames. And if I don't have it, I don't feel comfortable taking a trade. Let us look. I mean, everything is just dead right now. Everything is done, over and done with. Let's look at the pound yen. This one didn't do anything. I mean, it was, wow. See, I took this trade the previous day, which was the previous night during the European session, and I think I made like 30 or 35 or 40 pips. Actually, I've got those. I took 3 trades. I took the pound CAD during the European session. We went long here and ended up closing here. This was about a 70 pip move, 552 on the dollar range. We took this one. I took the pound dollar and did go long, and it did go long, but I ended up closing with a 3 pip loss, which is nothing. I woke up a little too late, and then the pound yen on this one made 30 pips. Could have picked up 40, but closed it here when it was coming back to this level. So 30 pips wasn't bad at all as well. And this was during the European session. So for those of you that missed it, you missed it. For those of you that got it, you were very happy, because I know I was. Nothing on the pound yen. I wouldn't touch it with a 10-foot pole right now. See the pound CAD. Oh, this one moved. Now this one's tricky because you had a signal here, it broke above, then it came right back down, retested, and then it went long. The signal here was short, and it did go short, but it didn't do much. And look at this, it's just nasty. Went up and down. I would not have. This came in at 1 a.m. Pacific, which is 4 a.m. Eastern time. So yeah, if you would have had a trailing stop on this one, you could have had a good trade on that one, but nothing on the downside. See the Euro CAD. This one just screamed to the upside, and you had a signal right here again, and this was at 11 p.m. Pacific, which is 2 a.m. Eastern time. All it takes is one dot, and this one formed right above this one, but more importantly is that this dot formed lining up with pivots. And I've said that if you see that combination, take it very serious, because they are. The algorithms right now are just, the bank's algorithms are just giving trades away. 186 pip trade. Wow. Beautiful trade. Let's see the US yen, if that did anything. Oh my. See, that's the one thing I like about these levels, is that they really map out the road, the trade of the day. I mean, this indicator, when it formed earlier today, it basically said short, but it had took hours before this thing actually kicked in. And this thing, what a trade. From here to here, 81 pips in less than an hour. Now that was a trade to actually get in on. However, problem with give me 1 second. The problem with this trade is that I would have had to find something on the higher time frames to tell me to go short, and I would not have had that. But it's still, I mean, this thing could potentially come down here. There's still from 123.53 to 123.32. But I don't like to follow trades. That's the thing about me, that once the trade is already hit, okay, there it is. On the 60-minute, you had plenty of time. This thing notified you at 1 a.m. Pacific, which is 4 a.m. Eastern, right before it came down. 5 a.m. would have been, or 8 a.m. would have been your trigger on this one, but it was right here. So they're making their decisions off of higher time frames, but following through. And that is very, very significant. Sometimes you just got to go searching, for these on the 1 hour, the 30, the 45-minute. They'll be there. And once you get the signal, then at that point you can go down to the smaller time frame and say, okay, let's map this sucker out. What's going on here? And basically go through the volume process. Now, the fact that this formed right where a pivot is, again, we're going over information that's very, very relevant to your decision process. because when you make these comparisons, and you have, this is a 240-minute resistance level. That's why I put it red. When it's green, it's long. When it's red, it's short. Not very difficult to read. Again, the way that our indicator suite works here is very simplistic. You know, the dots here are trend dots. These plus signs is a trend stop, and basically tells you that the trend is still in place until it's broken. We would never make a decision to go short after it breaks. No, we're making the decision here before it breaks the trend stop. So knowing this here, and the fact that you would have had pivots, would have been much easier to define around this level that they in no way were going to go long, especially when you have a 60-minute forming right off of a 240-minute level. No way they're going to go long. They're going to respect that. When those levels, when those power dots form on the 60-minute supporting higher time frames, it's because that price level is now considered sacred to the banks and their algorithms, and they're going to play out that plan. But the beautiful thing is that they go from level to level to level to level. This went from a 240 level to a 240 level. So yeah, very interesting. I would have expected this trade to come maybe down here, not all the way here. That was pretty aggressive on their part. Let's see the US CAD. This one gave you a signal to go short on the 15 here at, this was 10:30 my time, which was 1:30 a.m. Eastern, and you had a re-entry here at 5 a.m. right before it came down even further. So on the 15-minute, very nice on the US Swissy. Let's see the US CAD. This one's commodity based like oil, and you can see what they did. They went originally long. You did get the signal, and then of course this morning, because oil made a spike, the Canadian spiked down as well. And I would not have taken this trade. Wouldn't have touched it with a 10-foot pole. Sometimes it just doesn't make sense. It's like this one. There was no clear signal here on the pound Aussie, but this thing moved. I mean, it ripped. Let's see from top to bottom how it went. 242 pips. Ouch. That hurt. I would have tried, I guess I would have gone looking on the higher time frames to see if there were any signals, but there weren't. There were signals to the upside, not to the downside. So the original trade to the upside was correct. But then this morning came in, and God knows what came in that just made them just freak out and come down. So let's see if we would have had anything on the higher time frame here to go short. Nothing. 300. Nope. Nothing there. Let's go to 120. No. 180. Nope. 190. Nope. No. Anytime it's that aggressive, you don't get a signal for that. Let's see the 45 just for kicks. No. Not even close. And, you know, once these trades kick in, if you've missed it, don't go following it. You know, you live to fight another day. Believe me, you do. I mean, right now we're cranking out trades every day, on the 15, the 30, the 45, the 60, the 90, the 120. You just have to go searching for it. I mean, it's really, they're really there. And really, you can program 2, 3 different market analyzers with all these symbols, and just let that do the work for you, so you can, you know, minimize your chart analysis. We really tried to make it easy for you guys to trade. Sure, I'll send you a copy of that one. No problem, Hank. So yeah, you know, what you're seeing right now, I mean, our software is just kicking trades left and right. You're not missing anything. Now, I would have preferred taking this trade at the Asian Open, which this was about, let me see, 3:45 my time. My entry would have been actually here on this one, even though it would have gone against me a little bit. And you could have actually gotten in off of the 5th candle here. That would have been my entry. And look, it came down to a 240 level religiously, 57 pips. If you would have had a trailing stop, would have trailed you out. You would have made something. I would have never taken this trade long though. I just didn't have anything supporting such a thing. So I would have probably avoided that one. Let's see the Euro New Zealand. Yeah. I mean, this one, you had the signal here, but then the way this came in would have been a little fishy, and then you would have looked for an entry here to go long, actually. This would have been the one that you would have looked for. And it was a nice, clean trade to the upside. It never looked back. It went on for hours. 175 pips. Wow, great trade. Euro Aussie probably did something similar as well. Oh yeah, but no real. See, I would not have taken the trade on the Euro Aussie. The Euro New Zealand would have given it to me, but not the Euro Aussie. And no trade here. I mean, it's just a little bit above and beyond the norm. New Zealand CAD. You know, normally I don't trade this one, but it's been giving pretty good signals recently. And this one would have told you short here, especially because, like I said, if you see the power routes form and it forms at a level where there's a pivot, that's usually a very strong resistance level, and it may repeat itself, and it did. And it broke right through, and you had a re-entry on this trade here, close to, and this was not, close to midnight Eastern times when this thing kicked in. My entry would have been on this candle though, which would have been closer to 2:45 a.m. to the short. Not a big trade. And again, you probably would have had a trailing stop to trail you out if this thing would have happened, because this thing just exploded. Pound dollar. No. I would have taken the trade short because this is a weekly level. This 156.15, make a note of this. Power routes formed on this price level. Now, the fact that they just broke through this makes the British pound a long trade. Do not look for short trades on this thing because this thing just broke a weekly level. And this weekly level is going to be the death of the dollar against the pound, because the pound is going to run. Come Sunday, they may come back and use it as a support level and then continue to go along. You know, I would have preferred, personally, that Janet Yellen raised interest rates this past Wednesday, at least a quarter point, just to strengthen the dollar a little bit more. But now we're going to start to see the dollar weaken. And yeah, I mean, you know, it could be good for exports, but I'm not that keen on it, quite honestly. Let's look at the Aussie dollar. Yeah, see, this one had a very good trade to the downside, but then this came in. You know, what in the world? They must have really hated the numbers. And right now we're about to get new numbers released. So they must have really hated GDP and unemployment with a passion, because they used that significantly just to rip right through the dollar. That's what it was. It wasn't anything else. Aussie yen. I'm trying to find us a trade as I'm going through these, and I just can't seem to find it. See, the Aussie yen had this was a beautiful trade. I mean, it just doesn't get any better than this, guys. On the 15-minute, it formed here, and then it reformed here, the same price level at 90.64, going short. If you know, whenever we see the algorithm repeat itself the way it did here, there's just no question. The trade is legit. I mean, they're basically telling you this level is at its maximum, you know, level going short. Now, we didn't have anything on the 60. I'm curious to see the 45. No. The 30, maybe. No. No. Has to be on the higher time frame. The 120. No, nothing there. 180. No. Actually, no. You did actually here. I mean, but it should have formed here. I guess you could have used it, but the 15 is good. I mean, regardless, the fact that it repeated itself, and this was at 9 p.m. my time, which is midnight, again, Eastern time. I mean, this trade kicked in at 11:30 p.m. my time, and it never looked back, which was 2:30 a.m., and it just went down. So again, most of these trades you would have had a trailing stop regardless, and you would have been trailed out as soon as this happened. They just hated the GDP numbers. Man, did they hate them. The Swiss yen. Oh, what a beautiful trade. Right out the gate. Look at that. And then you had a re-entry here at 22:45, which is 10:45 a.m. 10:45 p.m. my time, which is 1:45 a.m. Eastern. What a beaut! I mean, these are the type of trades that we live for. I mean, wow. Let's see what this thing ended up doing from here to here. 123 pips. So yeah, the Forex is cranking right now, and our algorithms are just on top of it. I mean, you just can't miss. I would not have taken this trade, the Euro Pound. Didn't like the signal, even though you got a dot here. It's just a little too tight for me the way it traded out. I don't think I would have been able to really get this one. Made a nice move. New Zealand dollar, nothing here. Good trade here. That was a good trade here to the downside. This was closer to the European session right before it opened. This was 2 a.m. No, this was 1 a.m. Your entry was at around 2 a.m. right here, Eastern time. Nice re-entry here, but then, the news came out and good Lord, they went long. New Zealand yen. I mean, they're trading right below this right now, which is significant, meaning that see, this one came right down below this level again. So it means that this news that's coming out, Chicago PMI, they're either setting up to go long, I'm thinking short, because they're breaking below those levels. So let's see if that is the case. And this is a minute before. Let me see one thing. Oh yeah. Oh, it changed. Oh my. Yeah, it's coming back right back down. No buy, hold, sell trade recommendations, but let's take a position. Your stop loss is here, 20 pips away at 110.95, 19 pips. I'm thinking short. And the reason I'm thinking short is because that news is about to come out and they're trading right below this level. I mean, they went right to it, as you can see, but now it's pretty much over. So we could see a slight retracement. I wouldn't risk here more than 15 pips, quite honestly. But because they traded below this level, it looks like it could come down short. Pretty much you're fishing in a stock pond, yep. That's what the software is doing. It's guiding you, pretty much. I wish we had a trade here, but there really aren't any trades right now, guys. I'm sort of disappointed. Let's see what the numbers came out already. Were they better than expected? Come on. Yes, they were. Oh my. And we're going to have revised consumer sentiment within the next 12, 13 minutes, and that may be the one that we're looking for, and inflation expectations. If these numbers come out correctly or better, then we should see this thing really come back down and sink. So yeah, it'll be interesting. This one should be very, very interesting. But you know what? Let's look at this on the higher time frame. There has to be something here that gives us that signal that this is short. Nothing there on. I mean, this here did, when it formed here, it did go short. And anytime that they've pulled back in, they've come back down to this level, which is 110.23. It's trading at 110.81. I'm thinking because it formed a dot here, it may come here to 110.39, which would still be a great trade, quite honestly. But it's going to take a little time. Anything on the 16 now? No, it was on the 90 that it showed. 45 maybe. Not even close. 30, no. 20, nope. Let me go higher and see if I have, no, nothing on that one. 480. Ouch. Let's go higher on this one. Nothing. No, there's nothing. That level, though, is very significant because it's a 720-minute level. And the fact that they're not breaking above it any further is somewhat to see. Let's go to the 10-minute. No. I'm still not long on this one. It's starting to come down slowly but surely, but we'll see. Give me a minute. I'll be right back. Well, we're still in waiting mode, I see. Nothing has happened. Let's go to a smaller time frame. Let's go to a 5-minute. Ooh, but I do like this. Pivot, pivot, and pivot. to the downside, and it's trading below this one right now, which is really nice. This is 1084. Now granted, this one formed here, but this tells a big story right here. So I'm willing to hold and wait and see what they're gonna do. Would be interesting if those numbers came in positive, better than expected, and then this thing just came right back down like a stone. But you gotta love some of these trades. I mean, the entries were just, I mean, you had this one here basically tell you long before this thing exploded to the upside this morning. This was probably one of the best trades, the Euro trade, out of others that we saw. We saw others that were really good. You probably had approximately, I'd like to say, 10 trades that you could have gone into. 10. That's very significant. You show me a software that shows you 10 trades systematically off of specific price levels that the banks are using, and I'll give you my software for free, because I know that you won't find it. Let's see, come on. Just a few more minutes. Let's see if anything's setting up in the market analyzer. Nothing. Yeah, I'm going to put the European session and this video on YouTube, actually, for you guys to review. I hadn't been doing it, but I'm gonna start doing it again. And for those of you that are on the edge of, getting the software, don't think about it too much. Remember, tomorrow never comes, and you'll miss out, because this is the best time to be trading in the summer. The reason why is normally the banks reduce the amount of liquidity in the market, so you see smaller trades, but it's been very active recently, and they have to rebalance their risk pretty aggressively in the market based on all the fundamental news that's been coming out, which has not been good for anyone, quite honestly. So it's been a juggling game for them, but it's been very beneficial for us, because we're able to see these trades way ahead of time before they actually unfold. So the one thing that people sometimes don't understand, and it's very simple, is what software out there gives you a 1 hour to 2 hour window before the trade unfolds, and tells you pretty much that they are not going to go short or not going to go long, but that they're going to go in a specific direction. Now, the one thing we can't forecast is how far they're going to go, but we do know that they will go from level to level. And I'll make the example here. In this case, they did go from level, came up, came down, went right from this level to this one specifically. Then they went up again, came back down to this level, and then made the move to the upside. That to me is very significant. This is a daily level, this is a daily level, this is a daily level, and they broke right through this thing, and it went long. So that's why I'm not expecting it to come down too much, if it does come down. Why? Because this is a daily level, and if it breaks below this thing, then it's got to come right back down here and here. And I don't make my decision process off moving averages. I show them to you. This is a 15 and 200, and I show them to you just to show you that no way would you have made a decision to go long off of this. This would have, these price levels would have been more specific, and especially this one right here. This one just gave you plenty of time to really define the trade. Yeah, the indicator tool suite does the job well. I mean, quite honestly, I think so. So let's see, we got 3 minutes on this one left, and it's still trading below that level. So I'm curious to see how they're going to play it. The anxiety of a trade. In this case, there's no anxiety. We're just waiting for numbers. They went too high, they moved too high, and they basically gave their hand. This retracement that they did is somewhat significant. And you can see they came right down to the trend dots practically, to the trend stop. But they didn't break the trend, not yet. But out of all the trades, this is the only one that looks even remotely good to look at. Everything else is not worth it right now. Yes, the hard stop would be here, at 110.96 is basically where I would not go beyond that, because it's a specific price level. I never like to do more than 20 pips, quite honestly, and it's almost there. Reason for it just doesn't make sense, Um, again, we didn't get any power dots here, so this is one of those trades that normally I would not, I would really give it some real thought before taking, but I would never ever expose more than what do you call it? More than 20 pips. This is a minute right before this thing, and it's at the 20. So let's see, 7 a.m. kicks in. What are you going to do? If you're going to go long, we're going to get out. Seems like they're going to continue to go long. Yeah, I'll reverse it. Let's see what they do. Why these treacherous individuals? See, the fact that they broke long above this level means that they're more likely going to continue. What are the numbers? But I normally don't like to give up more than 20 pips on a trade. That's like the worst case scenario. Oh, that's bad. That's really bad. Consumer sentiment is just not good. Inflation expectations came in good, but consumer sentiment is bad. No wonder this thing's going to continue to go long. See, that's the one thing. If you don't have a clear signal, it's very hard to determine if the trade is going to be worth it. It's not a coin toss because they're trading off of a specific level, but it's not 100% the way other trades that we looked at were. The other trades were just, I mean, right off the gate, really, really solid. This one was not. And it's having a hard time breaking above 111.10 right now, where those pivots are. So if it breaks above those pivots, then it will scream a little further. Everyone was expecting this to go below 109, and fundamentals just come out, and when we have bad numbers, the dollar just takes a really bad hit and the euro takes advantage and rallies it. I mean, they're trying to recover value in the euro that they haven't been able to. So see, nothing's really set in stone. Sometimes people can expect it to go somewhere, but it may not. And look at that. It's not playing out. Not even to the upside. Huh. I'm still thinking the numbers were bad enough that this thing will continue to go long, not short. Unless they've already made the decision not to break that 111.20 any further, but the numbers were too just awful for the US right now. Oh, they are despicable. Huh. Very interesting, actually. Let's see. What are you going to do? Yeah, a bearish pin bar, I agree. However, okay, this gets interesting, this next candle. They're definitely not following the news, that's for sure. At least not in this instance. Because I would have expected a real bullish run on this one, based on those numbers. Let's see if it comes right back up. But again, we didn't have a legit signal here. See if it gets right above that 110.94, 110.95, which is where that 720-minute level is. And if it breaks above this time around, then it should make it one more leg up. Come on, let's go. It's just very hard to comprehend that they would not drive this thing further up when they've taken every advantage of bad reports coming out from the US to drive the euro along. Let's see. No, nothing. Oh, they are stubborn. Now, normally when you see this happening, that they're doing this game, this is their algorithm basically setting up. See, the only reason why I would say this is still bullish is because if this candle closes above this trend dot, then the next candle should come in and drive it up even higher. So this is very significant right here. If it breaks below 1085 or 1084, then it's to the downside, or it should be. But this is flattening out right here as well, and would serve more as a support level than anything. So what are you planning on doing? Because you're not doing much. And the news just came out, and you should have taken advantage of it. Wow. I am impressed. They did not use the news to take advantage of this moment. Seems like they've set up their price level, and it's not going any higher. Now again, this thing could come and bounce right off this level, 110.75, where there is a pivot, and where the trend stop is flatlining. I don't really think they're going to break below it. It just doesn't seem. It seems like they're just going to be ranging. Wow, look at those little devils. They formed the pivot right there on that candle. So what are you going to do? Not really, because in this case, you didn't really have what I call a legitimate signal here. You didn't have any power dots forming. You could have used it, but I don't think it would make any sense, even at this point right now. I'll show you real quickly. Unless you have a legitimate, credible level, and the dots actually forming, that's when you should really look at the volume. You can look at the volume here, but it would be very difficult to pinpoint, what they're actually planning on really doing. And I'll show you why. So here, for instance, let's look at this. 91 on the buy, 84 on the sell. Then this one came in, and the frequency of this one just went through the roof. 221 million on the buy, 220 on the sell, difference of 1 million. Really not much for this amount of move, but very significant. Then this one came in, the volume is less, 121 on the buy, 125 on the sell, a difference of 4 million. So don't really have a legit support level here. And this one is not really a legitimate resistance level because it's a mid-range level and they went right to it. So at this point, no, unless we would have had power dots here, then yes, I would have, considered like here, for instance, or here. It would have made sense. But here, not really. It just didn't really make a whole lot of sense from that perspective. But again, this is an example of a trade not to take as well, because we really didn't have a real legitimate signal, bottom line. And when we did have legitimate signals, then the trades were there. So you have to look at it from that perspective as well. I don't like to look at, oh God, I'm going to go higher. Yeah, let's go to the 10-minute. The volume makes sense to look at when the power dots form. That's when it really, really, truly makes sense, because that's where you're seeing the real high frequency trading taking place, because there's a purpose. They're defining that they need to offset their positions in that direction before driving the trade. So in this case, here for instance, they needed to offset their short positions on the 10-minute before going long. They did go long. They did it here. They offset their short positions here and then went long. These two were credible trades. This was not a credible trade. So this is an example of a bad trade. We were basing this trade off of fundamentals to see what the numbers were. Normally, I don't do that. And I teach people not to do this. Why? Because if you don't have a legitimate signal, you don't have a legitimate trade, bottom line. I was expecting this thing to, the numbers to come out negative only because they were trading off of this level, but it didn't play out. But I did not have a legitimate signal. That's the bottom line. So in this case, yes, it would not. Would I have normally recommended someone to take this trade? No, not really. I was trying to see how it played off because it came back so aggressively from that drive. But it really doesn't make sense why they didn't take advantage to drive this trade higher. This thing should have exploded based on those bad numbers. So yeah, that, if anything, that's the lesson to be learned this morning. If you don't have a real signal, you don't have a real trade. Normally we look for signals, off of specific price levels. This one was beautiful. I mean, it just didn't get any more credible than this. Anyone could have taken this trade long and really, really ripped today, because this one went from here to here. That's 140 pips. That's a sizable move. Yet I would have expected this to go a little higher, maybe to 160 pips, based on the fact that the numbers came out so negative from the U.S. Never chase the news. That's the one thing that we don't do. We do not chase the news. In this case, this came out before the news. So this sort of gives you an idea that they do have an indication of what the numbers are going to be before they're released. But here you're getting the signal. This is 4:50 a.m. and this thing came in at 5:30. 5:30 is when the news came out, and then at 5:40 it just exploded. So you had, 40 minutes practically to determine, what this was going to do. Let me repeat that. You had 40 minutes. And that's the one thing that you don't get anywhere else. You don't get, the one thing that I think that we have on our side is time, because we're not really scalping the market. We're actually looking for specific setups that give us time to analyze if the trade is actually credible and legit off of a specific price level at a higher time frame. And that's why we call this high frequency trading through volume price analysis, because we are doing price analysis at specific levels that the banks use. And that is more important than anything because these are the real support and resistance levels. I mean, let's break it down for what it truly is. And they change them every day. That's why you get different entries every day. It's just how it is. But they do tell you the best place to be, bottom line. At the end of the day, that's really what matters. And yeah, I mean, during the London session has usually been the best time to be trading right now, to be quite honest. The US session is sort of, today was what I consider a special day because it hasn't been this way for days. It's been the European session that's been very dominating. Oh, they're not going to do anything. And now that it's Friday, they've pretty much taken their profits. That's why they're not doing anything right now. But this thing should have screamed to the upside. Let me remove that indicator. We'll go searching for others. So yes, if anything, take a note. Do not trade if you don't have a signal. If you have a signal, then you know you're legit. But if you don't do it. See here, there was no signal here as well. The CAD, nothing. Would not have taken that trade. Pound dollar, nothing. Would not have taken that trade at all. Crude. Nope. Would not have taken that trade. The ES, let's see. This one did go long. Look at here. And the signal was legit. You actually had 20 minutes before things spiked. Could have gotten in here. Picked up a few points. Nothing significant. Again, the risk was very high here. Not really the type of trade that I normally like to trade or that I recommend people to do. Sunday will be very interesting. Very, very interesting. If you're able to see the market, you should. Because there will be some trades that will be setting up towards the end of the day today, and you may find, something that you were not aware of. That I can assure you. Let's see the CAD. No. Would not have touched the CAD with a 10-foot pole. Let's go back to the Euro and see what they're doing. Nothing. See, look at that. They are just stubborn as can be. I won't do much. Won't do hardly anything at all. It'll just range around that level. Here, Aussie Swiss, maybe. Nope. No legitimate signal. And sometimes that's how the US is. I mean, you just can't find anything. See, this was a great trade. You had the signal. It repeated itself, but at a higher level. And this one came out at 1:10, 1 a.m. my time, which is 4 a.m. Eastern time. The trade was legit to the upside, no question. These are the type of trades that we look for. These trades we avoid like a plague. But, I was trying to see if we had something there, and we just didn't have anything there. So any questions? Be a good moment to have a question, guys. The market's pretty much a dead duck right now. It's not really doing anything. And there isn't much more that I can share with you guys. And on others, I didn't get that, Stefan. Can you elaborate more on your statement? I do. Others, I do. Okay. Sometimes I do not see levels like on this chart. Right, exactly. When you don't have levels, and let me see why. Let me go to a higher time frame here. No, I didn't map this one out. I did, and something happened. I think I was teaching someone and I erased the levels. That's my bad. You're right. Normally I would have levels here. So that's all for today, ladies and gentlemen. There isn't really much that we can do. The market's just not giving anything. So want to wish you a very happy weekend. Thank you for joining us here at Phoenix Trading Strategies. If you have any questions, you can email me at info at, I'm typing it in right now, Phoenix Trading Strategies.com or Ricardo at Phoenix Trading Strategies.com, or you can call me 818-431-1357. And we will be posting these videos on YouTube, so they should be up by tomorrow. Have a great weekend in the meantime. Look forward to seeing you next week. No, the levels you have to do manually, and I teach you how to put them on manually so that you don't lose time. Yes, I can. Since the market is quiet, yeah, I can show you how to do that. You got to do it manually. Oh yeah, the legend. Yeah. Okay. Monday morning. Yes. So since we already have one market analyzer here, basically all you need to do is just go here, go to File. No, actually go to Tools. And where is that thing? No. Let me see. Workspaces. No. Connect. No. No. God, where did I have that? I had that right here. Instrument Manager. No, that's not it. I just did it. Let's see. No. Shh, come on. This is not happening right now. Oh, here it is. Go to File, go to New, Market Analyzer. And all you have to do here is basically right-click. You're going to go to Templates, Load. You're going to go to 15. Okay. And then all you do, so now you have basically the same thing that you have here. The only thing you have to do is just add the instruments. Unless you have an instrument list, which is defaulted. See, here are all the futures here that I use, and then you can start going through. Unless you put all your FX on the default, then at that point all you have to do is just go to currencies and go Euro USD. Okay, and for instance this one's on the 15 minutes, so this one we would change the columns and basically go to, let's say, a 60-minute. As tedious as it looks, believe me, it's not. It will make the difference for your analysis and trading, because it will take less time from you looking at the charts when you're looking for confirmation, multiple time frame confirmation on the market analyzer to go. and then that's it. So now you have a 50 and then you have a 60. And that's basically how you set it up. Not really complicated. If you're using two screens, then you can move your market analyzers to the next screen, of course, which is always, normally what I do when I'm trading. I do that. I will move it over because it makes more sense. But yeah, all you have to do is just add the instruments, instrument, default, currency, and let's say GBP USD. There you go. That's all you do. So you're just going to add the list. Unless you put them on default, then you'd be able to transfer right away. Boom, it would just pop up. See, the futures, all these were on default. That's why, they came out very, very fast. So that's it. Unless you got any other questions, I think we're good to go. No worries. Have a great one. Have a great weekend. We'll see you Monday morning. Thank you again for coming to Phoenix Trading Strategies. Bye-bye now.